Hey guys, good evening. This is Dave with Moniology. Hope everyone is having a great evening. Today is Sunday, October 8th, 2017, and this is the precious metal sector review. Overall, the sector looks to be bottoming right now after a fairly nice correction in the case of gold from about 1350 all the way down to about 1260 level here, and we think that we're very, very close to a bottom if we haven't already bottomed. And during this week we're going to shoot a couple of videos looking at some of the individual names in the junior mining sector, but for the time being we're just going to look at the overall charts of the sector: gold, silver, and some of the ratio charts. For those of you who are new to our videos, we look at charts from a weekly standpoint. Those remove most of the noise in the market and allow us to get a clearer and more broader perspective of what's actually going on, where the momentum is, and where the markets are likely headed. So let's have a look at the precious metals sector. So starting with the gold contract on a weekly basis, we closed the week at about 1274.90, and we're of the opinion, as we have been for a while since we broke out of this larger downtrend in 2016 and another downtrend here in basically in the middle of 2016. We broke out of both of these, and so we're of the opinion that we're in probably inning one or two of a very nice uptrend in gold that likely takes gold contract above $2,000 a contract in the coming years. So what we had here was we had this very nice breakout and in terms of RSI. So we broke out above the 60 level, and we saw some resistance, which came as no surprise because this is the same point of resistance where we were when price was around 1377. So if you look at it this way, there was a little bit of a negative divergence. So when price was 1377, we had momentum at around 70 RSI. When price was 1362, my apologies, a positive divergence. When price was 1362, we tagged that same level, so we had a little bit more momentum here than we had at 1377. So we broke out of that 1340 level here, and a lot of speculators started piling into long positions. But if you looked at the futures contracts, there's too many speculators long at this point, and it's not a surprise that when the hedgers started going short, that we were going to get a pullback. Now, where are we today? So we're below the weekly Bollinger Band, which is a strike against gold. But that often happens when you're washing the weekends out. You kind of go under some of the logical basis of support. Now we're around that 2060 level is an area that 2050 to 2060 area is an area where we thought that we would find support, and sure enough, we kind of had a bounce back once we hit that price last week. And so although we're right below 50 on the weekly RSI, and you definitely want to stay above that to remain in an uptrend, we think that this is going to serve as fairly strong support. Could we go a little bit lower? Can we consolidate above that 1250 area for a couple of weeks? Absolutely. The MACDs are slightly below zero, so we might have a couple of weeks of consolidation here, but we think that we're very, very close to a bottom here. Accumulation is at a point of support here. And I think that we'll be starting to move up in the coming weeks ahead. Why do we think that? Well, one of the things we do is we have a watch list of over probably about 50 to 100 junior mining names. And what we've been seeing is a lot of bottoming action, and we'll go through some of the better looking names throughout the week. And in addition, we look at a lot of ratio charts, which we'll take a look at momentarily, and those suggest that we're at the very tail end of this correction. So taking a look at the gold miners, we had this very bullish triangle pattern here that we broke out above in early August, and we had a nice rally. Now we've retested that breakout point around the 2350, and so far last week we had a hammer pattern, which is a very positive pattern, right as the MACDs were turning towards zero. And so, as is very often the case, right as you think we're going towards zero, but nope, we loop back into positive territory. We think that's starting to happen here. Notice there's a little bit pickup in the accumulation, of GDX, and we think that we're going to start moving higher now. For confirmation, you want to see price of the GDX break above that 25 level on a weekly. But at some point this year, we strongly believe that we're going to see that 3170 top in 2016 be retested. And again, no surprise that we're finding support right around that 50 RSI level on the weekly, which is a very, very important level of support. Now, taking a look at the junior miners, GDXJ, similar thing where we broke out of this downtrend in 2017 around February time. We've consolidated by retesting it, backtesting it several times from the upside, and now we're basing again above that breakout level around the between 30 and 35, and also we happen to be above the middle Bollinger Band. We think that we're going to make a run towards 45. Ultimately, we're going to make a run towards basically 50 level at some point this year. So there's some significant upside in GDXJ. You want to be looking at the junior miners both in gold and, as you'll see momentarily, in silver as well. This is the HUI, the Gold Bugs Index, is another perspective on what's going on in the gold sector. Again, we're bouncing above that 50 RSI, and that's where we expect it to find support. That's where we're finding support. And we're, in terms of the price level, around 200 is where we're starting to find price support, right above the middle Bollinger Band of 196. Nice hammer pattern last week. Get a couple of those, and we're going to be on the move again and try to retest that 286 level, which we think will break at some point this year, certainly in the not too distant future. The GDX to gold ratio. What you want to see if you're a precious metal bull is are the miners outperforming the actual metal, and you're starting to see that. You're starting to see that breakout. We saw that in August, and we had a couple weeks, months of consolidation. Now we're finally we see a hammer pattern, which is a very bullish sign. We want to see a couple of those hammer patterns to confirm, but we think that we're now, again, now that we broke above that 50 level on the RSI, the miners are once again starting to take the lead, and that's a very bullish development. Juniors to majors, another ratio chart that you want to see the juniors starting to outperform the majors. We had several months of consolidation, but this is a beautiful hammer pattern. We're finally starting to see some RSI divergence here, where we're pushing towards that 50 level in RSI, and we think that this is going to mark a period in which the juniors start to outperform the majors for a significant period of time. Silver juniors versus silver majors, again another hammer pattern here, and actually the silver junior to silver major is in a better shape than the gold juniors in terms of just the RSI, the positive RSI stair-step pattern in making higher highs and higher lows. So silver juniors are an area that you definitely want to look at right now as we start this bottoming process. Now, silver to gold is another ratio that you want to be cognizant of. Silver, you want to outperform gold if we're in a genuine precious metals bull market. And although we broke out of this bullish flag right here, and now we kind of retested, even shook a couple of folks out below the support level. But even though price started breaking down, RSI really didn't break down below support, and that's significant. That's a positive divergence, and now we're making a run back towards 50. Be on lookout for silver in the coming weeks and months. Silver may do very, very well relative to gold and also in absolute terms. Now, silver, in terms of the contract of silver, it's still basically, unlike gold, which broke out of its downtrend from 2016, silver has not. I mean, it did have this false breakout here, but it broke down below this trend line. Now we have a hammer pattern, and we think that this is going to break to the upside very, very soon. And if it does, that's your confirmation that silver is going to be making a run towards 22. We think 22 is a reasonable price target by the end of this year. But once this 22 level is broken, look out, because silver is going to make a substantial run. And finally on this list that are the junior miners in the silver space. Also, we had this beautiful run from bottom of 2016 all the way basically from $4 of a low to $20 in less than 12 months. We've consolidated down all the way to that 11 area. Now we're starting to break higher. RSI showing some very nice divergence where the price is around 12 right now, 1222, and RSI is at a level where when price was at 1282, 1339, 1402, etc. So now we're starting to show some very positive signs that lead me to believe that we are going to be moving higher. Bottom line is precious metals are a space that we think are in a very profitable, potentially profitable bull market in the early innings, and now we found an opportunity after this nice corrective pattern to add to our core positions and to potentially initiate new longs. Guys, thank you for watching, and stay tuned for our actual watch list videos later on this week. But in the meantime, please do support our videos on StockTwits, subscribe to our channel on YouTube, and also follow us on Twitter at Moniology. And finally, for those of you who are new to our videos, wanted to share with you our Patreon campaign. Patreon is kind of like Kickstarter for artists, and this allows you guys to support the work that we do at Moniology with simple monthly contributions of $10, $25, $50, or $100 a month, and that will allow us to build a very nice website, build a nice community around that website, and ultimately allow us to create better videos with better content, more exclusive content, and ultimately help you make more money and become better traders. Thank you for all your support, and have yourselves a wonderful week.